Our top corporate story today, Target, the retailer rolling out CEO succession plans along with its quarterly results. Right now, that stock is down by about 10%. Courtney Reagan's here, and she's got more on this story. Court, good morning.
Good morning. It's good to see you all. So Target CEO succession getting more attention than its results this morning. After more than 11 years as CEO, Brian Cornell will transition to executive chairman at the end of the fiscal year, so February 1st. Current COO, former CFO, and 20-year Target veteran Michael Fiddelke will take the top job in February. Fiddelke told reporters, I'm, quote, stepping in with urgency to rebuild momentum and return to profitable growth. He's got three priorities. He says, first, we have to lead with merchandise beyond the occasional design partnership. Two, we have to create a consistent experience for shoppers. And then third, use technology better to improve speed and efficiency. He focused a lot of his discussion with reporters around urgency and moving faster. Now, Fiddelke has work to do, to be sure, to get back to growth. Target has had a rough several years post-pandemic highs. Comparable sales have been inconsistent in-store and online. Operating margin is a little over 5%. That's well below the 8.4% peak in 2022. Shares down 22% this year. Now, under Cornell, the retailer has had inventory missteps. It took and then changed positions on a number of political and cultural issues that generated boycotts on both sides and hits to traffic and sales. But Cornell has overseen $34 billion in revenue growth since 2014, the growth of its private brand portfolio. It acquired Shipt. It transformed the shipping and distribution network to speed up shipping and many same-day options. Cornell leaned into stores. He really invested in these tired locations. He built out a network of small formats, and this was when competitors were closing doors. It was met with a lot of skepticism at the time, but turned out actually to be somewhat helpful. Now, shares have grown 81% under Cornell's tenure, but that's compared to 96% growth in the XRT retail ETF in the same time. 150% gain for shares of Best Buy, 309% for Walmart, almost 400% growth in shares of TJX, which likely has also taken some share, too. Kohl's, Macy's, Gap, they've all fallen. Macy's down 78%, Kohl's 76%, and 51% downshift in shares of the Gap in that time. Now, Target also did put up a slight beat on earnings and revenues, comparable sales too, although all three were below last year's level. Traffic and sales, they did accelerate from the prior quarter, but traffic and transactions are below last year. And when asked about prices, executives at Target told reporters that only raising prices, if they have to do that, that's the last resort. Inventory up about 2%, and Target is maintaining its full-year guidance for low single-digit declines in sales and reaffirming this very wide earnings forecast of $7 to $9 adjusted. Digital sales did grow 4.3% in the quarter. Those also have been up and down over the last several quarters.
Court, we spoke with an analyst, Stacey Widlitz, earlier this morning, spoke with Manny Chirico, who used to run a company, a retail company, PVH. They said that the disappointment they think is from Target not turning to an outsider.
Yeah, I can understand that, and that was a lot of the questions that have been asked, I think, by those of us that follow the company closely as well. And interestingly enough, Brian Cornell was actually the first outsider CEO Target's ever had. Right. He replaced Greg Steinhoffel after the data breach, if you all remember that.
2013.
Yeah, exactly. So that happened, and then they brought in Cornell as an outsider. And, you know, for many years, as we sort of just went through, he did a lot of things that really did seem to help Target.
Getting out of Canada was a big deal.
That was a big deal. Yeah, exactly. Starting it, but then pulling out of it actually fairly quickly.
It's been 12 years since the data breach.
Yeah, remember how big that was? And then there have been so many other ones, but that was really the first big high-profile data breach.
It's fine for you guys. 12 years goes like...
It goes fast.
It does. Yeah. It goes fast. So, I
had to fly out to Minneapolis when that happened. I remember. It was like right around the holidays.
It was a big deal. And then, obviously, so many others have happened since then. But that was a really, really big deal at the time. And then they brought in Cornell, who was an outsider. And then on the flip side, you have Fiddelke, who has been there his whole career. Started as an intern, Big Ten guy. You know, went to Iowa for undergrad, and then Northwestern for grad. Yeah. Held a lot of positions: HR, CFO, COO. And, you know, Target's had this role, John Mulligan, before Fiddelke, who was CFO, but also COO. And then he was interim CEO. So Target sort of has a recent history, too, of moving folks around, having them try out all sorts of business silos. So, look, I think it remains to be seen if this is going to work or not. I understand the disappointment because of recent years. 2022 is really sort of the peak when you're talking about share price, operating margin. I think the all-time high was something like $266, and now we're at 105. before today's action.
It was interesting to see some of those other stocks. We'd compared it to Walmart and the S&P 500. It's well below over that period of time. You forget how some of these retailers have really stumbled down 80% over some of these times. Ken Mangone is a mentor of Brian Cornell's, and he's spent some time with him too. But if you put money in this when he started and you left it there that whole time, you have not performed as well as you would have if you put it in the S&P 500.
You would think it's good news, bad news. It's like, oh, we're getting someone who knows Target inside out. He's been at every part of the operation. Yeah, we're getting someone who's been there with Target inside out for. You know, he both knows the company, but that means he knows.
And he was asked, you know, they were asked about this.
But he's partly responsible for what happened with the company.
And he was asked about this, and he says he comes at it with fresh eyes, and he talked a lot about speed and urgency. I hear what you're saying. I'm just telling you what the response was.
I'm just looking at the market reaction.
When we were asked, when we were asking that exact question.
Yeah, look at the market.
You know, the same thing with
like
John
Boeing,
Stankey at AT&T.
Yeah.
He's done a very good job of turning that company around.
Yeah. That's true, though. Yeah, he was. So no one really knew whether he wanted to do all the media stuff or not. He said, he was totally on board, but then he didn't last long. Didn't keep it. Yeah.